Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our banner story. Bad loans again rose in January. That's following the expiration of the 60-day moratorium on debt. Non-performing loan ratio increased to 3.7% in January. That's up from 3.61% in December. This was also higher than the 2.16% ratio recorded in January 2020. Bad debts in January soared by 67% to 392 billion pesos from a year ago. Loans are considered non-performing once they are left unpaid at least 30 days beyond the due date. For 2021, Fitch expects the NPL ratio to spike to 4.5% to 5% as many consumers struggle to settle their debts due to the COVID-19 pandemic. Fitch says the passage of the Financial Institution Strategic Transfer or FIST law will be a source of relief for the banking sector. That law allows banks to sell bad debts to asset management firms. Meanwhile, a report by Bloomberg Intelligence says lending momentum may only recover in the second half of the year, noting that economic recovery will likely be the key driver of banks' loan growth. They said the country's economic recovery may be weaker and prolonged due to vaccination delays and unemployment caused by the quarantine restrictions. Kicking off the markets report this Monday with a renewed focus, unfortunately, on the rising COVID-19 cases, at least here in the Philippines, particularly in the capital. You can see on my terminal here, we are now back to the rates we were seeing in July of 2020, at least in NCR. That's according to the Octa Research Group. Now, they are saying that this is due to the new strains that have been coming in. You can see on my terminal here, 3 straight days of new cases above 3,000. Now, what is really threatening here is the fact that Octa says that unlike the past surges that we did experience in the past few months, this current surge has spread very quickly in a short period. So NCR has been averaging 1,025 new daily cases over the past 7 days until March 6th. That's an increase of 42% from 1 week ago. And get this, 130% increase compared to just 2 weeks ago. Another very pressing issue right now is the hospital bed occupancy in NCR that's already at 44%, ICU occupancy 53%. They are tagging the high-risk areas as Pasay, Malabon, Makati, and Navotas. Now, on the upside though, we do have more vaccines to be arriving, particularly 38,400 shots of AstraZeneca. That brings the total that we've now received from both AstraZeneca and Sinovac to 1.125 million doses of COVID-19 vaccines. There, another one that is on the way to provide that but hasn't received the FDA approval yet is Moderna, hopefully providing 13 million vaccines with deliveries to begin in mid-2021. And of course, that is what is going to be moving the markets this morning as we check in on the opening, and you can see quite a pullback. We're back to 6,800 levels this morning. That's down by 0.4%. Now recall, we were already down by a few points on Friday, 6,800 levels already there. But even as that happened, week on week, we were up by 1.3%. So we had 3 straight weeks of losses in the month of February, and then finally recovered, and it does not seem to be the optimistic case for the time being. Let's take a quick peek at our sectors here and try to take a quick check on the financial space, especially on that bad loans activity. You can see financials down by 0.7% this morning. We'll be watching out for that counter throughout the day. Properties as well. Now, one thing though, or one stock at least that is still optimistic despite all of these rising vaccine case COVID-19 cases rather, is Cebu Pacific. They are hoping to restore 30% of their network in the second quarter of the year. Now, what are they saying? Right now, they're at 23% of operating capacity. They've restored 89% of the domestic destinations, and they are hoping to increase that, particularly in the summer season. They did a survey, and many Filipinos are more willing to travel in the second quarter. Cebu Pacific up by 0.4% this morning. And finally, let's just take a quick peek at some earnings earnings here, particularly AEV. They have seen quite a mixed 2020 performance. You can see their net income for the full year 2020 down by 30% to 15.4 billion pesos. However, the fourth quarter seemed to pick up. That's 13% to 7.1 billion pesos, 13% up year on year compared to fourth quarter of 2019. However, when you take a look at the full year contributions, power was 52% of that income pie in 2020. That's actually 14% lower than 2019. Financial services, of course, the own Union Bank was 18% lower than 2019. However, one bright spot for Aboitiz Equity is the non-listed food unit, that's Pilmico. That was up by 38% in terms of income contribution, even as the real estate business, Aboitiz Land, dropped by 64% in terms of profit contribution. AEV trading flat here. Let's move on to Aboitiz Power and just a very quick deep check on that one. AP, meanwhile, posted also a higher fourth quarter amid recovery. That is up by 44% year on year to 5.6 billion pesos. That brought their 2020 net income for the power distributor and generator down by 27% for the full year to 12 pesos and 6 centavos. Aboitiz Power trading in the green this morning, bucking the sell-off of the rest of the bourses, up 0.4% to 25 pesos and 10 centavos. Okay, guys, let's check in on the biggest stories we're watching this Monday morning. Rice import tariffs collected by customs jumped to over 2 billion pesos in January. That's as the agency improved its valuation system for inbound shipments. This January print was 58% higher than the 1.3 billion pesos logged a year earlier. Customs Commissioner said the average valuation of rice imports improved based on the Bureau's electronic-to-mobile system data. January also saw the average value of rice imports increasing by 11.5% to over 20,000 pesos per metric ton. Recall that Finance Secretary Sonny Dominguez earlier told Customs to tighten its guard and check on the possible undervaluation of rice imports by private traders. Dominguez now says the improvements made by the Bureau in ensuring the proper classification, quantity, and weight of imported rice stocks led to the increase in their average value, which in turn generated higher revenues for the government. Congress is set to form a joint oversight committee to monitor the implementation of the FIST law. The JCOC will ensure that incentives under the new law are not abused by parties availing of tax-light asset transfer rules. The panel will be led by Senator Grace Poe and Quirino Representative Juni Cua, who serve as committee heads on banks and financial intermediaries for their respective chambers. Poe says the Oversight Committee will ensure that all provisions of the FIST law will be followed, while Cua said he will see to it that periodic evaluation of incentives provided are done, since this is the portion of the law which is prone to abuse. The creation of the JCOC is authorized by Section 27 of the FIST law, which was signed by the President in February. And the Asian Development Bank is setting an $80 billion target for climate financing from 2019 to 2030. ADB Energy Sector Chief Yongping Zai disclosed that the global lender financed a total of $23 billion from 2009 to 2019. This time, the bank committed to ensure that at least 75% of its project will address climate change mitigation and adaptation by 2030. Recall that last week, the fossil-free ADB coalition called on the International Bank to end funding and support for gas, coal, and oil. For now, the ADB said it is in the process of revising its 2009 energy policy, which will guide its investment decisions for at least another decade. Experts have said that the worst is behind us, that we had hit peak cases and we've hit economic rock bottom, but the latest figures feel threatening. Here to share his views, we have with us Mike Ricafort, Head of Economic Research at RCBC. Good morning, sir, and welcome back.
Hi, good morning, Danie, and your viewers.
Sir, we have to talk about this COVID surge, third straight day above 3,000, and that's even, without the president having officially eased restrictions amid this vaccine shipments. Tell us, how much of a concern is this, and was this in any way expected?
Yeah, well, this is somewhat expected in view of the further reopening of the economy, just as it tries to move closer to, well, more people work, go out. So that is somewhat expected. And it may also have to do with the fact that, well, maybe it may also reflect some, of course, with the start of the vaccine arrivals and walkout, or rollout rather. So that would that somewhat boosted the confidence of more people, as some of them may have started to go out again, work, spend, and take vacations, and do their usual business and work. So, however, this is something new because, of course, what's really expected, we increase arrivals and rollout of COVID-19 vaccines. Uh, well, what's expected now, although to be fair about it, it's barely a week since the first rollout started. So let's give it some time. If indeed that would lead to some further reduction in cases, but nonetheless, it's really important to emphasize that despite having the vaccines and being rolled out, we already have Sinovac, then AstraZeneca, and there would be at least 1 million more Sinovac coming in this month. And that would be at least 1 million per month until May, and then about 2 million per month thereafter, as well as the arrival of more AstraZeneca vaccines. That would be around at least 4 million shots by May. So hopefully, but hopefully that would increase further the rollout. Especially, of course, the priority first is the medical frontliners.
Sir, does
Yeah,
this
yeah.
change the plans of the government to ease the lockdown restrictions? And if cases continue this way, can we still afford further months and still a GCQ without shifting, at least in NCR?
Maybe it's really emphasizing, of course, that there need to be more vigilant, despite, as has been always emphasized, not only here in the Philippines, but worldwide, to continue wearing masks and face shields, to keep the distance, to wash their hands, and those who may already be vaccinated may have to do so. It's more of that because that comes hand in hand with the further reopening of the economy. Of course, this is another consideration to think about because just a few days ago, we didn't have cases. We
Okay.
only have less than 2,000 cases. Of course, that's one of the reasons why some of the Metro Manila mayors deferred the reopening of
Mhm.
cinemas and the arcades, precisely because of that, because of this latest development. So it may have to tweak, it may have to somewhat, of course, make rationalize further the reopening of the economy in a more measured fashion, in the sense that, of course, now the key lead now, we have more vaccines coming in. That's
Mhm.
maybe for the next 2 to 3 months, we'll be getting a total of more than 5 million vaccine shots. So that may have to be, well, of course, we're moving towards the proposed nationwide MGCQ. So
Yes.
the
Sir,
further
sir,
reopening of the economy.
sorry to interrupt, but does this warrant a push for more stimulus to come urgently, given the fact that it does seem that parang madidelay yung reopening ng economy if we continue in this path?
Well, now, well, there are already stimulus measures that are pending, like the trade bill. It's just a signature away by President Duterte anytime soon. So that's really a huge stimulus because that would outrightly reduce corporate income taxes by 5 percentage points to 25% from the current 30%, and it would also give certainty, especially for both local and foreign investors, with the investment incentives. No? It would make investors more decisive now. They have been waiting for this for the past 2 to 3 years under the
Mm-hmm.
previous Sitira bill. So that would be key right now. And of course, there are funds for infrastructure spending, and of course, that's one of the key drivers also. Well, especially now, with the timely approval of national budget and the additional funds from the unused allocations last year from the 2020 national budget. and as well as the balance of the funds for Bayanihan 2 till the end of June. So that would be key initially. And then, of course, if we talk about more stimulus, maybe because of the fiscal position of the country, the need to maintain also a delicate striking to strike a delicate balance. Of course, the need to manage also the country's debt stock to more at a more sustainable level. Now it's about 57% of GDP after the latest increase as of January. It came only from 54.5% of GDP. So it's really fiscal prudence is really also equally important as much as the
Okay.
need to roll out more stimulus measures. But then again, Danny, let's see now because if we would still see a relatively slower reopening as a result of the spike in cases, and of course we're not through because of course it's still on the table. Would there be because of in view of the new variants, especially that emerge?
Mm-hmm.
Would there, the big question now, would there be risk of lockdowns again? The travel
Okay, so
restrictions have been
exhaust
in
muna
place.
the existing fiscal measures, so that we don't risk our fiscal discipline. Sir, last question po on inflation and your opinion on another month of inflation above target. We're now at 4.5% year to date, way beyond the 2 to 4% target of the government. And this just in from the Department of Agriculture, the price ceiling, sir, on pork and chicken at least will stay until April 8th. Has this been enough, to arrest the increasing food prices? How come we still haven't seen inflation going down despite the fact that the DA has been putting these price ceilings and increasing the importation?
Yeah, Danny, that's true. We're at the critical point right now in the sense that this could be a potential turning point in the sense that we're transitioning away from La Nina. We have seen the storms until just a month ago, just a few days ago. We saw storms. We had Typhoon Oring in southern Philippines that caused some flooding in parts of Visayas, Mindanao, as well as in Bicol. So that caused the elevated food prices, especially vegetables, and of course, more importantly, that's why pork has been the highest, at least 20% year-on-year change. We have seen, of course, the supplies are disrupted because the deliveries were disrupted or they were stranded in the various ports at the height of the typhoons. So hopefully, we're transitioning into the summer season with the expected end of La Nina. And of course, Northern Philippines was not really affected that much in recent months, especially with the latest Typhoon Oring. So hopefully we would now see new harvest, new planting, new supply of vegetables and other agricultural products, and hopefully we would also see now more movement of pork, especially more pork supplies for Metro Manila from the Visayas and Mindanao and other areas that are not yet affected by ASF, as well as expected increase importation, and of course the price ceiling, and that would be a stopgap for now. At least
Mm-hmm.
prices are not they're not running away in the sense that they're controlled for the meantime. But it's almost you just give it a few days, it's almost over. Maybe it's less than a month
Okay.
away. That's April 8th. So
Yes.
hopefully
Mm-hmm.
down the road, but worldwide we're we're coming from low denominator or low base effects because it's already the anniversary of the lockdowns.
Mm-hmm.
So there may still mathematically, assuming all other factors are the same or constant, we may see some uptick definitely. But hopefully there's even a chance to see 5% levels in the coming months as a result, starting March, April, maybe until around latter part of the year. But hopefully this would be offset because food is the biggest component of inflation, almost
Mm-hmm.
40%. Hopefully with the onset of the summer season with hopefully no more big storms in the horizon, and there would be more supply, more crops being harvested and planted. Hopefully that would ease food prices, and that would be
Okay.
a very important offsetting factor in the
Okay,
country.
so offset that, and as you mentioned, supply side issues regards to inflation slowly being arrested there. Thank you so much for those insights. That was, of course, Mike Ricafort of RCBC.
Thank you so much, Danny, and to your
Thank you,
viewers.
sir. And that's a first look into the business day. Today is Monday, March 8th, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.